Dollar yen, daily forecast June 27th, FXEmpire.com. Dollar yen originally fell during the session on Tuesday, but as you can see, it did bounce up to form a fairly nice looking hammer right around the 79.50 level. With the Federal Reserve, of course, looking a little bit less likely to ease over time, it could be thought that the dollar will gain against the yen, which, of course, the Bank of Japan has just started to actively work against the value of the yen itself. With all of this being said, though, we have received word from Ben Bernanke this last press conference that the Fed is, quite frankly, just paying attention to employment more than anything else at these moments in time, and as such, the non-farm payroll Fridays will again be a very interesting time for the dollar-yen pair, as it was a few years ago. This pair used to be almost solely driven by the employment picture. Probably a little bit of an overstatement, but it was greatly affected by the employment picture in the United States for years until we had the financial crisis. It does appear that we may be returning to that type of setup again. With that being said, and the Fed not looking likely to ease, if the employment picture in the United States can pick up, we could see a nice rally in this pair. However, technically speaking, we are looking for a break above the 80-60 level or so, and if we get that on a daily close, we are willing to buy this pair and perhaps hold on for the long term. We are not interested in selling because just below is where we start to get into the area that the Bank of Japan has intervened several times in the past.